Have you ever wondered how economic changes affect your financial situation? In this vast world of ours, the economy is like a giant ocean, and we are all tiny boats trying to navigate its waves. Our financial journey is influenced by the ebb and flow of this vast economic sea. Now, imagine the economy as a living, breathing entity. It expands and contracts, rises and falls, just like our own breath. These movements, these fluctuations, are what we refer to as economic changes. They can be as minor as a ripple or as monumental as a tsunami, but each one can send shockwaves through our personal finances. But here's the thing, not all economic changes spell disaster. Some can bring about positive shifts, opening up new opportunities and pathways to prosperity. On the flip side, they can also bring challenges that test our financial resilience. So, let's dive deeper and understand how these changes can affect you positively and negatively. First, let's explore the positive side. Economic changes can bring about opportunities that can benefit your financial situation. When economies grow and expand, they often bring with them an increase in job opportunities. This growth can lead to new industries emerging, existing industries expanding, and companies hiring more personnel to meet increased demand. In turn, this can lead to lower unemployment rates and potentially higher wages for workers. So, if you've been looking for a job or a raise, a growing economy can be your best friend. But it's not just about jobs. Economic changes can also increase investment opportunities. When economies are on an upswing, companies often see increased profits. And when companies are profitable, it's a good sign for investors. More profitable companies mean more potential returns for those who have invested in them. So, if you've got some money to invest, a growing economy can provide you with a plethora of opportunities to grow your wealth. Another positive effect of economic changes can be lower interest rates. Central banks often lower interest rates to stimulate economic growth. This can make borrowing money cheaper, which can be a boon if you're looking to get a mortgage, start a business, or even just pay off some debt. Lower interest rates can also boost the stock market, as companies can borrow money at lower costs, potentially leading to increased profits. All these factors, job growth, increased investment opportunities, and lower interest rates, can lead to increased income and wealth. They can help you move up the economic ladder, improve your standard of living, and achieve your financial goals. It's also worth noting that these benefits of economic changes are often interrelated. For instance, increased job opportunities can lead to higher wages, which can increase your income and allow you to invest more. Similarly, lower interest rates can stimulate investment and job growth, further boosting your potential income and wealth. However, it's not always a bed of roses. There's also a flip side to these changes. Now, let's look at the other side of the coin. Economic changes can also have negative impacts on your finances. Imagine this scenario: the economy takes a downturn and businesses start to feel the pinch. As a result, job losses become commonplace. With fewer jobs available, competition for the remaining positions intensifies. If you're unfortunate enough to lose your job, your income takes a direct hit. Suddenly, monthly bills become a daunting task, and saving for the future seems like a distant dream. Now, let's talk about investments. Economic volatility often leads to decreased investment opportunities. When the economy is unstable, businesses may hesitate to expand or invest in new projects. This reluctance trickles down to the stock market, where shares can plummet in value. For those of us who've invested our hard-earned money, this can mean a significant loss of wealth. But it's not just about investments. Let's consider interest rates. In an attempt to stimulate the economy during a downturn, central banks often lower interest rates. While this might seem like a good thing, especially if you're looking to take out a loan, it can also mean that the return on your savings is diminished. So, while you might pay less on your mortgage, the money in your savings account is also growing at a slower rate. Moreover, inflation is another beast that often rears its ugly head during economic changes. When inflation rises, the purchasing power of your money decreases. In other words, you can buy less with the same amount of money. This can lead to a decrease in your overall standard of living. So you see, economic changes can be a double-edged sword. They can lead to job losses, decreased investment opportunities, higher interest rates and inflation, all of which can negatively impact your income and wealth. But don't worry, there are ways to navigate these changes. So, how can you navigate these changes to protect your finances? Well, let's dive into that. One of the most effective strategies is diversifying your income sources. Don't put all your eggs in one basket. Perhaps you could consider a side gig or investing in real estate or stocks. The idea is to create several streams of income, so if one dries up, you have others to fall back on. Next, invest wisely. This doesn't necessarily mean playing the stock market. It could be as simple as putting a portion of your income into a retirement fund or into an education fund for your children. The key is to think long-term. Lastly, maintain a good credit score. This might seem unrelated, but a good credit score can open doors to better financial opportunities, such as lower interest rates on loans. Remember, knowledge is power. The more you understand about the economy, the better you can protect your finances. In conclusion, economic changes can have both positive and negative effects on your financial situation. From the potential for increased income and opportunities during periods of economic growth to the challenges and setbacks that can come with economic downturns, these shifts form a significant part of our financial journeys. Remember, knowledge is power. The more you understand about the economy and its effects, the better equipped you are to navigate these changes and make sound financial decisions. So, keep exploring, keep learning. In the great tapestry of economics, every thread counts. Your personal finance is one such thread, intricately connected to the larger picture. So, let's keep this conversation going. Let's keep pulling at the threads. If you found this video helpful and interesting, please hit the like button. Don't forget to follow and subscribe for more empowering financial content. Also, if you have any takeaways or thoughts, feel free to comment down. Thank you for watching.